Hello and welcome to ETF Pulse, ETF.com's vodcast or video podcast. I'm your host, Kristin Myers, editor-in-chief of ETF.com, here as always with my co-host, Nate Geraci, president of the ETF store. And as I've been calling him lately, Nate Stradamus for all of his predictions, which we have a couple in this show. So let's take a look at the Pulse rundown. So first up, we're going to be taking a look at Bitcoin, and more specifically, spot Bitcoin ETFs. Now, Michael Saylor predicts that IBIT, that's the iShares Bitcoin Trust, will be the world's biggest ETF in just 10 years. And that comes as spot Bitcoin ETFs pulled in a whopping $3 billion in just 1 week. And active ETFs, the active space could grow to $11 trillion also over the next decade. And that's from the less than $900 billion that the space occupied by the end of 2024. And launches are picking up in 2025, 75 a month now. That's up from 59 a month in 2024. And then we're going to be talking about the ETF.com Awards and all of the biggest surprises that we felt we saw on what I am calling the ETF industry's biggest night of the year. Hey, Nate, how are you?
I'm doing great. It was so nice to see you in person last week.
I know. And we didn't get to tape. I know for our audience is like very sad about it. A cocktail fueled ETF Pulse pod, but it's okay. We're here now. We're going to talk about it. All of the awards today. Okay. So first up though, but before we get to the awards, let's talk about cryptocurrency. Michael Saylor, I guess a fellow crypto evangelist, Bitcoin bull, says that IBIT, which by the way, I should mention, won Best New ETF at the awards last week, says it's going to be the biggest ETF in the next decade. I called you Nate Stradamus. What is your prediction? What does your what is it called? What are they called?
What is that? The magic crystal ball.
There we go. Crystal ball. We're in fine form today. What does your crystal ball say?
Okay, first of all, some context. So Michael Saylor said this at an event that Bitwise was hosting last week, and this was on corporations owning Bitcoin. And so some of the people who were in attendance, they started tweeting this out, and then of course the mainstream media ran with it. And my initial reaction, and I actually tweeted this out, was that the current largest ETF, which you and I have spent a ton of time discussing, which is VOO, the Vanguard S&P 500 ETF, that has taken in, listen to this, that has taken in nearly as much money just this year in 4 months as the total assets in IBIT. And VOO overall is currently like 10 to 11 times larger than IBIT. And so what I said is, look, it's going to be a tall task for IBIT to overtake VOO. I don't care what the time horizon is, whether we're talking 5 years, 10 years, 20 years. However, I will offer one caveat here, which is that obviously, if the price of Bitcoin skyrockets, that obviously changes everything, right? And my guess is that's what Michael Saylor is betting on, because it's basic math.
Of course, he's
right?
betting on it. MicroStrategy also invests in Bitcoin. So, I mean, it's also a part of like his basic case for the company as well, that Bitcoin will go up.
Keeps going up, right?
Liquidity was placed into Bitcoin.
But just think about the math here for all of the the math wizards out there. So there's about 56 billion in IBIT right now, and the price of Bitcoin, last I checked, we know it flops up and down, but it was around 95,000. Okay, so if Bitcoin goes from say 95,000 to 950,000, right? Well, there you go. All of a sudden, IBIT is right there next to VOO. So this is a play on price. Now, I think the right way to look at this is that IBIT, in my opinion, is never going to consistently take in more money than VOO. But again, could the price of Bitcoin far exceed the price of stocks and catapult IBIT into the biggest ETF by assets? Yeah, that's certainly possible. But Nate Stradamus is not going to predict that at this point.
I'll get you a hat or something that says that.
I think we said t-shirts, right?
Fine, I could do t-shirts. Either one. Check it out.
We're gonna have like a podcast apparel store.
Yeah, at the ETF.com merch store, which doesn't exist yet, but I can make that happen. I actually very much, well, obviously, we know exactly which side of the case that I would take on this one. it's a greater than 0% chance for sure that IBIT could become the world's biggest ETF, but I don't think it's a sizable chance at all. And there's a couple of reasons why. One, based on what you just kind of laid out on like what would actually have to happen to the Bitcoin price, right? And some people do think that Bitcoin is going to go to 1 million. There's a lot of people that actually say that it's going to go to 1 million, and 10 years is around the time horizon that I've actually heard a lot of people kind of speak about. And I think people said, in 2025, it's going to go to 150. We're at just under 95 right now. I think it's still going to be a tall order for it to even get to 150 this year. But again, this is over the next decade. I think a couple of things need to happen. One, I think investors need to decide exactly what they want Bitcoin to be in their portfolio. If they actually want to think of it as digital gold, if they want to start thinking about it as a sort of store of value, or if they start thinking about it in other ways, right? And Bitcoin has been acting like tech a lot lately. It also has been acting a lot like gold, mimicking gold amongst the economic volatility. I just don't know if I see Bitcoin going to 1 million in 10 years. Again, greater than 0% chance. But I think the biggest reason I don't see it becoming the biggest ETF is because I think that what has propelled VOO to be the biggest ETF will actually continue to propel it to take on money over the next decade. I think you're going to continue to see retail investors pile into the space and immediately snatch at VOO. I think you're going to continue, despite what we've seen with the economy and what we're hearing on the economy in terms of recession and volatility and tariffs so far this year, I think that the US economy is going to continue to grow and going to continue to be strong, and buying VOO just makes sense. Or IVV or SPLG or any other broad market fund, but VOO is the popular one right now. And so I think people are going to continue to pile it in. I think that when you think about constructing your portfolio, VOO is one of the first things that you think of as like your foundation. Bitcoin is not, and IBIT is not one of the first places that people think to place their money. And so I think it would require a lot of levers to be pushed all at the right time for VOO to really kind of cede its crown to IBIT or any other cryptocurrency ETF that could maybe pop up along the way and sort of capture investor interest.
Your point on the US economy continuing to grow and expand, that's an important one, because in the example that I gave, the very simplistic example, that would be where these two ETFs, they don't take in any flows, and the price of Bitcoin goes from 95,000 to 950,000. Great, then they're roughly equal. But that makes the assumption that US stocks aren't going to go anywhere for the next 10 years either, right? Yeah. And I'm not going to make that bet.
Yeah, I wouldn't bet against that. I wouldn't bet on that either at all.
Now, one thing I do want to say, you mentioned the flows into spot Bitcoin ETFs over the past week.
Yeah, let's talk about
I just don't want to, because I also don't want to be negative here. Look, the bottom line is we're going to continue to see, in my opinion, the spot Bitcoin ETF category continue to grow. And that 3 billion that went into them last week, that was one of the better weeks the category has had.
Yes.
Right.
So
since the
I
launch.
actually just pulled up not every single spot Bitcoin ETF, and you don't actually have to, right? In order to see kind of the flows, because IBIT alone, and I pulled it up, I pulled up IBIT on, the ETF.com screener tool. And over the past 5 days, it pulled in 1.4 billion. So of that 3 billion, IBIT took in half roughly. And the rest was then kind of Fidelity is the next biggest, spot Bitcoin ETF. And so it kind of trickled down from there. But I mean, if you look at just over the last 6 months, IBIT, let's use IBIT as the proxy for all the spot Bitcoin ETFs, right? Piling in, because that's where most of the money goes when people are purchasing spot Bitcoin ETFs. Pulled in about 17 billion over the last 6 months, but year to date, it's pulled in about 4 billion. So
there's a caveat there too. That doesn't include, so you're looking at last week, earlier this week, IBIT actually took in $1 billion in a single day, nearly $1 billion.
And you can actually see that there's a clear spike.
Yeah, that's its second largest inflow day ever.
Yes. And I think, again, I think what we're seeing is, again, investors are deciding exactly how they're thinking about Bitcoin inside of their portfolio and how they are thinking about Bitcoin. Now, you've said this several times, I'm sure, to just people at your local grocery store. I have a feeling like you just say this now to everyone. But you keep saying that, like Bitcoin is a teenager and it's growing up, and we have to see how it consistently behaves. And I think, again, investors are kind of grappling with that, if we want to call it existential question. But I think there is an existential question that exists for Bitcoin. And I think investors right now are grappling with that very question on exactly how they think about Bitcoin and therefore, a spot Bitcoin ETF, and how it operates inside of their portfolio and how they really think about it.
I was smiling because I thought you were going to say that I keep talking about how it's showtime for Bitcoin, which I do believe that's the case, right? I've said that for multiple weeks. And I do think, like, if you look over the past week or so, stocks were up. And so there was more of a risk on appetite. And historically, that has helped Bitcoin. But, to what you're alluding to, if Bitcoin wants to be thought of as digital gold, it has to act like it, right? And I do think it's done a better job of that recently.
Yes.
And that is why we're seeing the flows. Like if you look over the past month, Bitcoin is up something like 13%, while
Yeah,
the S&P 500 is down.
13.3%.
Yeah.
It's up in the last month. I also had kind of pulled some of those performance numbers. You've actually, so we previously had seen a sort of divergence between GLD, so gold, and IBIT, and they started to actually mimic and mirror each other, which is what you would expect to see if Bitcoin is digital gold, but we hadn't
Right.
seen that. We had seen there was almost no correlation between the two at all. And we started to see a bit of a correlation over the past couple of weeks. All right, so moving on from Bitcoin, let's talk about something else that might happen in the next 10 years. We're going to just keep the Nostradamus train going, the prediction train going. Okay, because we haven't discussed what we think. I mean, I knew exactly what you would say for Bitcoin. I have no idea what you're going to say now for actives. So the active ETF space, we already know that there has been a massive acceleration in that space, particularly in spaces like fixed income, active fixed income. We've seen more and more actives popping up in that. But it currently sits at around 900 billion. Let's just call it, 1 trillion. But it's supposed to grow to 11 trillion in a decade, actives. I have thoughts. What's your, do you think that we're going to see that, growing by 11xing essentially?
Well, first of all, yeah. So what you're referencing, this was from a Deloitte report. They had this 2025 financial services industry predictions. And, they said active ETFs are going to grow by 13 times or whatever. Okay. I think it's tough to predict an exact number 10 years into the future. But yeah, is there any question that active ETFs are going to grow and grow significantly? No. I mean, we already know this. And I think it's a simple combination of investors seeking active management, right? Just given concerns over the top heaviness of market cap weighted indices and everything going on in the markets. I think that, at least here in the, today and now, that's a catalyst for people to look at active management. But also, there are just way better ETF options on the market right now for investors. And I've talked a lot, Kristin, about how the growing supply of active ETFs is actually creating demand, right? Because pretty much all of the largest active managers, they have finally embraced the ETF wrapper, right? They're putting their best portfolio managers and their flagship strategies into ETFs. And so that's attracting investors. That supply is creating the demand. And I don't think that's going to stop. We know that asset managers are only getting more heavily involved in the ETF space. And a lot of those asset managers, they are traditional active managers. So I just think you have this confluence of factors that there's no question this category is going to grow. I have a hard time putting a specific number on it, but the trajectory, the trend that Deloitte is pointing out is absolutely correct in my opinion.
Okay, but I'm going to play devil's advocate slightly. I do, of course, think that active is going to grow. However, and we've discussed this before, I think, and it definitely is going to happen over the next 10 years, there's going to come a time where investors are going to start asking themselves if they are getting the return on there, if the ROI is there for the cost. Now, there are competitive active ETFs in terms of fees, but at some point you have to ask yourself, if you are outperforming in passive, why are you in active, right? And we've discussed this, there's a reason why active is particularly successful in certain niche areas where a lot of folks have a little bit of confusion and they don't want to have to run any sort of like analytics around it. I mentioned fixed income because that's a huge one right now. No one knows what the Fed is going to do. No one knows where interest rates are going to go. The inflation picture is incredibly murky. We have economic volatility. It makes sense that a lot of people are saying, I don't want to have to do this. Let someone that is smarter than me, better than me, manage that. But that's not always going to be the case. And I don't, just as we were talking about for, Bitcoin over where the US economy is going to go over the next decade, I imagine over the next decade, there's going to be more times of economic prosperity than there is going to be of confusion, chaos, uncertainty. And that will be a time when people are going to ask themselves, why am I inactive right now? And can I imagine that the niche spaces where active could thrive grow 13x? No, I don't. Just if we look at it at scale, especially with all the other products, and we're going to talk about this next, the launches, all of the other products that are coming available that are probably not going to be inside of the active category. I think that there's just going to be also so many more options in passive or even, cheap active, right? Like smart beta that people can go to instead. I think like it's going to like that's going to become a point where you're going to start asking yourself, like, if active's not outperforming, why am I in it?
So you've laid a lot on the table there. Let me address some of your points here. And we'll have a little debate.
My devil's advocate.
Yeah. So look, we've all seen the data. We know that over time, active managers underperform the market. That's nothing new. That there's data going back decades on that. But a couple of things that I would mention are, one, there's always going to be a subset of investors who want to try and do better than the market. That's never going to change. Right. No matter how much data you put in front of them, no matter what's going on in the markets, whether markets are up, markets are down, there is a group of investors that always feel like they need to try and do better than the benchmarks. So if you start there and then you go, okay, we also have all of these new active ETFs coming to market, that's not going to stop. And then let's talk about, for instance, the ETF share class structure, where you're going to have all of these active managers that are going to have an ETF share class of existing mutual funds. That's going to be a huge tailwind for active ETFs. And then I would just argue, Kristin, think about all the money that is still in actively managed mutual funds. There's still significantly more money in traditional actively managed mutual funds, typically at a higher cost, not near as tax efficient as in the ETF vehicle. That money is going to continue gravitating over to the ETF space. And so I'm not suggesting that passive ETFs are going to take a back seat to active ETFs. I'm not suggesting that at all. But does it make sense to me that active ETFs could, grow by 13 times over the next decade from the current nearly $1 trillion? Yeah, I could definitely see it getting there.
Well, I guess the question really becomes, that I didn't really consider, is if the active space grows 13x, how big does the ETF space grow over the next 10 years? Because the active space will obviously always be a slip, not a small sliver, but will always be a slice of the pie. I think then the bigger question, or probably the more important question, becomes how big does the pie get over the next decade?
Right. And I just think there are so many factors there. I mean, I've seen projections out there of the ETF industry going to 35 trillion or 40 trillion over the next decade. It's sort of like what we were talking about with IBIT. There are just a lot of factors. I mean, what do the markets, the underlying markets do, right? I mean, that's probably going to be the biggest factor. If for whatever reason we have a lost decade in financial markets, well, clearly that's going to stunt the growth of ETFs overall, just because there's not going to be that price appreciation. But I think, again, I'm being a little repetitive. We know the direction of travel here, and that's that investors are going to continue to put money into ETFs. That's not going to change. And, will passive ETFs still take the bulk of those? Sure. But I think there's enough for active ETFs to eat as well.
Boo, hiss, tomato, tomato. I'm still taking the opposite side of you. just for the just out of pure spite and a contrarian will, I'm going to. All right, so launches, because we're talking about just the entire ETF industry growing, demand growing as supply grows. Just feels a bit like tail wagging the dog, but 75 launches is the pace per month that we have now in 2025, which is up from 59 launches that we had in 2024. And you actually tweeted out about this, and I've now lost the tweet. I can't remember what it was in 2023. I think it was 30 something.
It was 40. So yeah, Bloomberg had some great stats on this where they laid this out. So I think it was 40 in 2023 and then 59 last year. And then yeah, 75 new
This
launches
is
per
monthly,
month.
just, for everyone
Per
listening.
month, correct.
Per month launches, that's the pace, I should say, the average launch rate per month. We are now sitting at 75 launches a month. And I mean, I've seen it. I mean, just how many, issuers are kind of sending us press releases or whatever. It's almost always now that issuers are sending us, a release saying we're releasing this batch. It's always a batch. It's almost very rare now that I'm getting one launch at a time. It's always like we're launching this new suite of funds, right? 3, 4, 5, 6 funds that kind of, even up as many as 7, I think I've even gotten one, all at a clip. Which of course is contributing. And there's, again, so much innovation. And I think once we have that share class kind of structure really sorted out, then we're really going to see this pace pick up. I wonder how much we'll get in a month if we can start hitting 100 launches a month. I mean,
it's going to grow. I like what you were saying just about issuers launching these in batches, because you're right. We have seen a lot of that. I think especially in like the leverage single stock category or some of these buffer categories. I was actually looking at the list
buffer
of
for sure. It's always
yeah.
a suite of buffer. There's never one buffered ETF. It's always a suite of buffered or defined outcome ETFs that are always launched at the same time.
Well, that's what I was going to say. I was looking at the list of ETF launches this year, and it's exactly what you would expect, right? You have a bunch of single stock ETFs. There's a bunch of buffer ETFs, covered call ETFs. It's a lot of the usual suspects. That said, there have been some pretty interesting new launches as well. So like there's this endowment style ETF from Cambria. There's one that I think you would like, and maybe you mentioned before, it's an Iceland ETF. This is from Glacier Shares. How do you like that, Glacier Shares?
I think that was around the time there was like the Texas ETF that had been launching, like these country-based ETFs that are starting to launch now. Yeah, and I think they had mentioned Iceland, which I love Scandinavia, having lived there for a few years. Although Iceland's technically not Scandinavia, but it is a Nordic country. But so I do have a soft spot in my heart, but you just think,
yeah, but like that stuck out to me. We were talking earlier about, Bitwise having this Bitcoin corporations, or standard corporations day. So Bitwise actually has an ETF around this, the Bitwise Standard Bitcoin Standard Corporations ETF. It's a mouthful. My point is, there's a lot of the usual suspects that are launching, but there are some different ideas out there that we haven't seen before.
I mean, we've seen them, right? Like the Texas Capital MMKT is one that just kind of comes to mind since we were at the awards and they were sitting right there in front of us, in front of the stage. The money market fund that had launched. I mean, I think that we're seeing some interesting stuff now that there hasn't been as much pickup in terms of flows and interest so far. But I mean, there's the debt focused ETFs, whether that's close or there's some like
private credit.
Right, private credit ETFs that are launching. There's some folks that are trying to get like, into the private equity space through a fund. So there's just like a lot that's happening in the space when it comes to this sort of new innovation in the fund space, that I think that there's just a lot happening. In addition to, of course, the single stock stuff just makes sense. I mean, the whole equities, think of how many, you think there's 4,000 ETFs, but think of how many equities that exist out there that people could now tap into. And we've only scratched the surface, right? It's been like the high growth tech names, right? Like your NVIDIAs, your Teslas that have really sort of come out. But at some point, we're going to start seeing it permeating everywhere. And then not to mention the crypto ETFs that are really sort of chomping at the bit right now to kind of come out. I think XRP, there was a launch of another batch of XRP ETFs. Still not the spot XRP ETF, but a batch of the sort of leveraged XRP ETFs that sort of dropped the other day or a couple of days ago.
We talked, there was something like 70 plus crypto ETF filings in the hopper, right? But I think the big thing here, just looking going forward, so if we're at 75 a month, that's on pace to just shatter the annual launch record. And then to what you were alluding to, if this ETF share class structure is approved, and I tweeted this out, like 75 new launches a month is going to look like child's play. Like there's going to be so many ETF versions of existing mutual funds coming to market that our head's going to be spinning, just trying to keep up with this stuff.
Do you think that the sort of mutual fund conversion, though, holds as the investor grows younger?
Uh, Explain that. What do you mean?
In the sense that like mutual funds are boring and you think about it as like your grandfather's investment vehicle. And you also only have that option for a lot of retirement funds, right? So that's the only real way that you're seeing a lot of like investor sort of involvement in mutual funds at this point in time. And so it makes sense that a lot of these mutual funds are converting to ETFs. But I'm curious, as the investor grows younger and younger, and they're not interested in mutual funds and they start their investing journey elsewhere, if they then, after the mutual funds convert, are then interested in those funds and some of those
You're
like funds.
so you're just making my case that I was making earlier about active ETFs
I know,
growing.
I,
You played devil's advocate to your devil's advocate.
I
You just
know.
reiterated what I was saying. Yeah, 100% I do, because there's so many studies that are already out there showing that younger investors prefer the ETF vehicle for their exposure. And that's what I was saying, that if there's more supply out there, that if all these strategies that are currently in mutual funds are now available in the ETF wrapper, there's more supply, I would say better supply in terms of quality of
But I
product.
mean, do you think they're still even interested in the strategy, having been exposed to other strategies to start?
I mean, there's nuance there, right? Like there's only so many ways you can slice and dice large cap stocks or, any particular market. So like, do you reach a point of saturation to where the next, 100 active uh, ETFs that were mutual fund conversions, they don't matter because they don't look any different than what's
Right.
already out there? Yeah. I mean, you reach a point of saturation at some point, but, um, I don't think we're anywhere close to that yet.
Oh, no, not, yeah,
Yeah.
no.
I think there's a long runway here.
Yeah,
But I like how you just made my case for me on our
no,
previous
I didn't. I
conversation.
should ignore that. I don't know what you're talking about. All right, let's end this on the ETF.com awards. You were a judge. You were also present, handed out a bunch of awards just to kind of go over some of the winners, some of the top winners. VOO clinched the top spot for ETF of the year. Best new ETF went to IBIT. Uh, Now I can't remember some of the others. Thematic went to Nukes, which is the range Renaissance Nuclear ETF. What were some of there's 18 categories. Rob Arnott won the Lifetime Achievement Award winner. Um, what, since you were a judge but you didn't know the winners, right? Because the way that the judging goes, you submit your choices blind and independent of all the other judges. So though you're all in a judging panel, it's not like you're voting right in front of each other. So were there any surprises for you on the night where you thought, wow, I did not see that one winning?
Okay, first of all, I do want to say that I thought you and the entire ETF.com team, seriously, you guys put on a first class event. I love the Tribeca rooftop as the venue. I think that's a cool place. And I think there were like, what, 350 people there? Is that
Yeah,
right?
upwards of 350. It is growing every single year. So if you weren't there, you 100% missed out. It is definitely the Oscars of the ETF space. And Eric Balchunas even compared the choices to the 1995 Oscars, where you had Pulp Fiction and Shawshank Redemption, for like, ETF of the year, the ETF of the year category. So it was a great night.
Well, and also we should mention, and I'll tell you if I had any surprises, but you emceed the
I
festivities with a little help from ChatGPT.
I made ChatGPT write my whole speech. I tweaked it, and the tweaked jokes were the ones that no one laughed at. I'm kidding. Everyone laughed at my jokes.
You got a couple decent ones in there. I can't say I loved them all, if I'm being honest, but there were some decent ones in there.
All right. Well, you get to MC.
Okay.
Congratulations.
Hey.
You can MC with me next year. You're welcome.
So, look, in terms of were there any surprises? Honestly, I didn't think there were any major surprises. Now, I don't think everybody that I voted for won, but that's no big surprise given there were 18 categories, right? So I obviously, even though I'm Nostradamus, I wasn't going to get all 18 right. But
I was wrong, by the way. I said that nukes won. I think I said thematic. No, I was right. The Range Nuclear Renaissance Index ETF won thematic ETF of the year for nukes. But
yeah, the winners honestly made sense to me. If I had to pick maybe one category, um, where it just caught my attention, it would probably be commodity ETF of the year. So
yeah,
PDBC won that, the Invesco commodity ETF. just if you look at the other competitors in that category, I thought GLD had a good case because
I
if
thought
you look at,
BTC had a good case.
well, yeah, that's another one, right? Yeah,
Bitcoin.
YBTC, the Roundhill Bitcoin Covered Call Strategy ETF. There's also STKD in that category, which I thought was interesting because it holds both gold and Bitcoin.
Correct.
But if you look at performance, PDBC last year was basically flat and gold was up 30%. So, PDBC it's a great product. That would be the one that I would point to as just a little surprising.
That was a really tough category, actually, even for just picking the nominees, because you're right, how well gold performed. And it was also an interesting question for us as well, because there were so many Bitcoin products in there. And it was, do we want to think of Bitcoin as a commodity? I was like, yes. So it's going to count for this category. No, I thought this was a stack category.
Well, that's the other obviously stat category. We've talked about this was for ETF of the year, which was won by VOO. And I'm not going to disclose who I voted for, but I will say that was really difficult going through those. And I think if we just look at, say, VOO and IBIT, who I think many would point to, okay, that those seem to both have really good cases to win. I think all the nominees did, but those two in particular.
Okay, so here's what I'll just kind of reiterate who the nominees were. What I loved about this category was that they actually spread across many different classes, right? So you had the Granite Shares, 2 times long NVIDIA ETF NVDL. So you've got a leveraged in there. You had IBIT, so you've got a spot Bitcoin in there. Then you had the Janus Henderson AAA CLO ETF, so JAAA. So you've also got a CLO in there. Then you have a thematic in there for nukes, the Range Nuclear Renaissance Fund. And then you have a broad market equity fund in there with VOO. I just love that it was like all different facets of the ETF space represented in one category. And we try to only do 5 nominees, so we couldn't do everything in there. But I love that it was sort of representative of all these different kind of spots of the market.
And actually, I think that's the case if you look up and down all of the 18 categories and you look at the winners. I love the fact that you did have some of the largest asset managers out there who were winning awards, but you also had some smaller, more entrepreneurial issuers who won. And I think that obviously is reflective of the ETF space overall. So I love that. But yeah, I was just going to say in the ETF of the year category, VOO obliterated every flow record out there last year, and it's continued to vacuum up money this year. And IBIT, of course, we've talked about that, greatest launch in ETF history, and new category. So I think that one was really tough, but I wasn't surprised that VOO won. I mean, if you beat the annual inflow record by like 70 billion, you probably have a good case.
Now I'm gonna have to find out off record who you voted for. I'm gonna work on that.
Top secret.
Trying to break into
the innate. You know what I need to do? I need to go back and look at everybody I voted for and marry them up to who the actual winners were. I think I was pretty good overall.
I want to see how well your picks have done since, like, Nate's picks.
Pretty good, if I do say so myself.
I'm curious. That would make for a great article that you can have on ETF.com. All right, well, that is it for ETF Pulse. Nate and I will be back next week to chat more about the ETF space and industry and the markets and everything else that is going on.